you start seeing investment managers and individuals moving their money out of bonds and into Bitcoin, that's kind of like the first step to me to this gateway. And the reason for that is that they're recognizing what I was just saying before, which is the dollar's being debased. It does not matter if you own a bond that's giving you a 5, 6, 7% return. You're still making a negative real return on that. And so once people start to realize that, these bonds are not helping them meet those obligations, and they start reallocating into Bitcoin, that's kind of like the first big step to get to that reserve.
Moss argues offers a potential escape route. As a neutral, trustless, digital reserve asset, Bitcoin could absorb excess liquidity, mitigating inflationary effects typically seen in assets like housing or equities. Instead of newly created dollars inflating real estate or stock markets, some of that monetary premium could be diverted into Bitcoin. This could protect consumers from being priced out of essential assets while also offering a hedge against the debasement of fiat currencies.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, I think a lot of people look at Triffin's Dilemma as this dilemma that we have to constantly flood the world with dollars, which is endless debasement, and then hollow out the middle class for this. And I think a lot of people use that sort of like as an excuse of like, we can't get ahead, we're bound for failure and things like that. But I don't know if that's necessarily true, especially in light of having Bitcoin today. And so it's possible that we have this neutral reserve asset, Bitcoin, that's able to soak up a lot of this extra liquidity that's being created. And so you typically think about this endless amount of dollars that have to be created to continue to feed the world. And that would cause a lot of inflation. Some people might say that causes asset appreciation, not inflation. We're consumers, we buy houses, we buy assets, it's the same thing as far as I'm concerned. But when we have a neutral reserve asset like Bitcoin that can suck up a lot of that monetary premium that may go to houses, might go to asset prices, it sort of allows the system to continue potentially shielding us as consumers from being priced out of homes and being priced out of other assets, and at the same time, being able to use Bitcoin to really outperform inflation.
We're looking at right now, Bitcoin's a $2 trillion asset. The whole dollar system, depending on how you measure it, so if you look at the broad money supply plus the whole bond market, you know, and the global fiat market, we're looking at hundreds of trillions of dollars. And what's challenging is there's a network effect because unlike Bitcoin, where there's not a lot of Bitcoin denominated debt, in the fiat system there's a lot of debt denominated in those fiat currencies. So that represents inflexible demand for those currencies. And then people have to kind of save in the asset that they owe at the end of the month, or that they owe on a bond contract or a loan or something. So I think this process is going to continue to take a while, but that doesn't mean that it doesn't move pretty quickly in any given 3 to 5 year period. Like if we, you know, when we were at some of these conferences 3 to 5 years ago, the network was much smaller. It's gotten a lot bigger since then, but it still has a long way to go. So I think there'll be another 3 to 5 year period. It'll still, even if it's, you know, 3 times or 5 times bigger than it is now, it'll still be pretty small on the global scale, but then give it another multiple after that, and actually at that point you really start to challenge some of the biggest in the world. Right now, Bitcoin is climbing the market cap level, like it's getting nearly as big as some of the biggest companies in the world. So some of the biggest companies in the world are over $3 trillion in market cap. Bitcoin's around $2 trillion. So one more doubling, and it's basically bigger than any company in the world. Give it another 10x its scale, and it's kind of rivaling gold. Once it crosses, you know, 5, 6 trillion, it's basically bigger than the monetary base of other countries in the world. And it's going to take years, but it's so far it's 16 years in, and it keeps churning and getting higher and higher.
I think really the significant move would be when Bitcoin starts to get allocations out of bond portfolios. Once you start seeing investment managers and individuals moving their money out of bonds and into Bitcoin, that's kind of like the first step to me to this gateway. And the reason for that is that they're recognizing what I was just saying before, which is the dollar's being debased. It does not matter if you own a bond that's giving you a 5, 6, 7% return. you're still making a negative real return on that. And so once people start to realize that across the board, I mean, this is far and wide, not just the BlackRocks and the Fidelities of the world, but all of their customers and all of the other major banks and institutions, once they start realizing this, especially like pension funds, because pension funds have to own bonds in order to meet future obligations. But once they realize that these bonds are not helping them meet those obligations and they start reallocating into Bitcoin, that's kind of like the first big step to get to that reserve.
I think a really important signal too is the fact that Bitcoin is like over 100,000, despite the fact that interest rates are 4 to 5%. If you would have asked people that 3 years ago, a lot of people were saying Bitcoin is a zero interest rate phenomenon. It only makes sense when interest rates are near zero. And one of the new signals that happened this time is that despite the fact that the Fed got about as aggressive as they could, they kind of raised interest rates as quick as they could until they started blowing up the banks. That was kind of the ceiling that they ran into. And gold and Bitcoin had a little bit of a headwind temporarily, but then they just kind of shrugged that off. So gold soared from 2,000 to 3,000 an ounce, and Bitcoin's well over 100,000, despite the attempted hawkishness of the Fed. And this is kind of the first cycle where that's happened. I would argue that it's because we're in fiscal dominance. That's the thing I keep emphasizing. But that's a new era going forward, and it's a different type of trading regime than it has been over the past, the prior 15 years before then.
Moss also emphasizes the strategic opportunity for the United States. Instead of resisting Bitcoin, the U.S. could position itself as the global hub for Bitcoin innovation, just like it did with the internet and tech companies in the past. If the U.S. encourages Bitcoin infrastructure and adoption, it retains a first-mover advantage in the new monetary order. History offers warnings, like China sticking to the silver standard while the world moved to gold in the late 1800s. Such missteps come at a cost.
The biggest problem the U.S. has, right, is that we're seeing the whole world wake up to the fact that the U.S. dollar cannot be trusted. That's the biggest issue that we have. And when you then look at Bitcoin, Bitcoin is trustless. It doesn't need to be trusted, and that's really what will drive forward in the innovation here eventually over the long run. Is that you have that base asset or currency that you can now trust without worrying about it being debased, it being seized, or it being frozen or locked away from you. So that's really that's a big deal for the U.S. and embracing that and pushing forward on it quickly is that's really important in my opinion.
When you think back to the last couple of years and these emerging nations trying to figure out a way to get away from the U.S. Treasury, right? So once something happened back in 2022 when Russia attacked Ukraine and we shut off the SWIFT access to them, which is their payment system for the world, and then we seized their U.S. Treasuries, which was, I mean, we can all agree was a monumentally stupid tactical play, which why would we do that when we need the entire world to buy U.S. Treasuries? Okay, so that leads us to the BRICS nations getting together, Brazil, Russia, India, China, South Africa, and they're looking for a way to get away from the U.S. Treasury. And so they're looking for a cross-border payment system that would be neutral. And so you have those countries like that who can't really even trust each other, right? So you've got, are they going to go on a gold standard? Then how is that going to work? Are they going to audit each other's gold reserves? I mean, you think that Putin's going to let in Shin to come audit their reserves? Likely not. So what's an asset that they can use that would back whatever currency that they're going to use, or what's a currency they could use that would be trustless? Well, it's an obvious answer. It's Bitcoin.
I think by being the best place to do business. I mean, we're already a very large market, and you want as many companies as possible to want a jurisdiction here and to operate here. And going back to James's point with the payment systems, a lot of these country blocks have been trying to do like their own little closed source payment systems for quite a while. Like Enbridge, for example, they have all these little like cross-border CBDCs, and then it's like, if you want to sanction this one, how do we do that? And they never really get any sort of network effect. They never really take off. Meanwhile, the entire time, Bitcoin is standing there staring them in the face as the open source solution while they keep trying their own little closed source ones. And I think the main thing that held it back for a while was, one, it was still fairly small, and two, it's volatile. So these entities would have to hold it, and so there's career risk. If you work at someone's central bank, for example, you're not generally recommending to go buy Bitcoin. But as it kind of gets to a $2 trillion plus market, it's really starting to enter the conversation, as all of these like closed source ones have failed to take off. They've stagnated. They're not anywhere kind of further ahead than they were 3 years ago, and Bitcoin is. And I think that's the, in addition to a reserve asset, it's the payment rails and the settlement rails that they've been looking for, and it's always been there.
Certainly there's first mover advantage to having global-based money. So we can see some parallels throughout history. So for example, in the late 1800s, the world was moving to a gold standard. China decided to stay on the silver standard. Silver got devalued. They lost about 30% of their purchasing power, and they sort of fell behind the world order. Maybe another time was after World War II, when the US ended up with most of the gold, right? And so we can see these times in history where you have this advantage, this first mover advantage. That's number one. And so the US being able to acquire it in front of other nations. But I think the rails as well, but also being open to innovation. And so not only do we want the Bitcoin to be here, we want all the businesses building on and around Bitcoin to be here. And so if you look at sort of what the US has led with over the last probably 50 years, it's been mostly computers, telecom, internet companies, services, things like that. And I think that innovation, that creation in the United States can continue to keep that here. So it's not just Bitcoin, but it's also the innovation and the products being built on it.
The innovation doesn't stop at the asset level. Moss envisions a future where Bitcoin isn't just a store of value, but becomes the underlying payment and settlement rail for the world. In a landscape where trust is eroding and CBDCs are floundering, Bitcoin offers a clear alternative. It provides transparent, borderless, and censorship-resistant rails for both personal and institutional use. And finally, it's not just about Bitcoin. It's about the ecosystem being built around it. Wallets, exchanges, payment processors, Layer 2 solutions, and new financial services. Please like and subscribe.